Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And today we're going to be looking at Macy's. So we'll start off with Macy's because this is a blog post we did 2 days ago on the 9th indicating trouble with Macy's. And the trouble was we broke a long-term trend line. You could see that from our previous post on the 9th. And we also had a weekly trade triangle which coincided with the monthly trade triangle that kicked in right here on August 14th at 62.80. The market's currently trading at $40.90. It's down 13% today. It just shows you the power of the trade triangles. I'm going to put our weekly trade triangles in here, as you can see. Boom, right there. That was on the 9th. That's when we reported. It's at 47.10. And again, it's down quite dramatically in a short period of time. And it looks like it can continue to move still lower. Let's move on to Alibaba, that has a one-day single day sale of approximately 12 or 13 billion dollars, still counting I guess, but it was a great thing. But the reality is Alibaba, even though the trend is up on the monthly and the weekly, it is retreating today. So maybe everybody was anticipating that. But what I like potentially about this stock is this, and I want to watch this very, very carefully because I think this potentially could be a really big winner for everyone. I'm going to draw a trend line from the across here into here. Okay, that's where we see this. And we also want to look at the base, because I think this potentially, if we go over this level, we could see a really large base. So here's what we're looking at. And this sort of playing out for a while and then going up and through. And it could be because of the holidays or Christmas, of course, but the potential is for this stock, in my opinion, is to move from this level here, let's say $60, to the $85, that's $25, and that takes it up to the $110 range once it breaks over the level we show you right here, the previous high. So that's the key thing. Remember, the trend is your friend. The trend is up in both the weekly and the monthly, and you can see that quite clearly here. It's a plus 75, meaning it's a moderate bull market. It's not fully super bullish, but it's beginning to build that way. Watch this carefully, because if it goes over the levels we talk about right here, it's going to be off to the races, and we'll see the 110 level we talked about right here. So let's see how that plays out. Now the next stock we're going to look at is Monster Beverage. Now we thought that we reported back on this is the 5th, when we talked about the earnings coming out in this stock, and quite honestly we were neutral. We weren't bullish, we weren't bearish, we were sort of on the sidelines, and it's had a big move up. So we didn't catch that move, but we didn't get caught the other way had it gone down. And let me show you an example of that. This is News Corp. So News Corp, we were neutral on News Corp coming in, and you can see quite honestly what's happened. It's had a big drop. The earnings were sort of somewhat disappointing, but it doesn't matter. This stock dropped based on our analysis of the trade triangles, which were sidelines, on the sidelines, not a clear-cut trend. So pretty much the same there. Disney, we were reporting, we thought Disney's earnings would be a little flat, not too great. Well, they turned out to be a little bit better, or the market anticipated that the Disney could do better with some of its assets, and it's up a little bit, but not very much. But the big one, I think you have to agree, is Macy's, when we really got it right, when the trade triangle was so important to get that in place. I mean, we still have Disney to go over the highs here, which is the 122 area. Whether it does that or not remains to be seen. We've got a much more of a two-way market now that we didn't have. It's a plus 70, so it's not a super bull market. And again, we potentially could have a little bit of a divergence here in the RSI, so I'd watch that very carefully. Now this is what I want to show you on gold. Gold, we think, is scope this out just a little bit further. Now this is what we're seeing in gold. The longer term right here is still saying it's still positive, but I also want to share with you some things we're looking at, and that is some of the cyclic work. So here's a low, here's a low, here's a low, and we're in a low period right now. We're actually way oversold like we were before in some of these other periods. And I think the next move here, if we get it that's similar to here and here, is going to be about, we move from this level right here, which is around 80 up to 60. So it's about an $80 move. And if we get the similar move, we should take the market back up to 1160. Let's see what happens. But watch here, I would watch the weekly very carefully and the daily for a clue that's actually bottomed out and going to have another pop up to the upside. I think that's what's going to happen. Gold potentially could be bottoming out. But the key thing is if it does go below the lows that we saw, then that would change the bet altogether. But let's see how this plays out. But we're back to an area of support in a cycle. You can see this sort of cycle like right here. So I think we're very close to that area right now in gold. Let's move on. Looking at the Dow, we've talked about this before. This is a lot of resistance for this market to get over, and I'm not so sure it's going to be able to do it, at least in the very short term. Whether it does it later on, that remains to be seen. But this is a 6-year, almost a 7-year bull market, and they don't go up forever. Remember that. We have it's a two-way market potentially. There's a lot of things that could happen. Interest rates going up, some major failures after Christmas. I think a lot of retailers are hanging on for Christmas, and after that I think we'll see some businesses just really folding up their tent and going home. So let's see how that plays out. Same picture with the S&P 500. You can see quite clearly that we have resistance, really serious resistance in my opinion, which I think is enough to blunt it. Even though we have our trade triangles are positive, it's certainly nothing to get in. I would not be so excited about this market. And we did get very close to our target zone in terms of this pivot point. We talked about this pivot point before, and that was right here. We had the move, the low, the pivot point, and we flipped that over, and that took us up to the resistance where we thought we'd see some problems. On the NASDAQ, we're sort of butting heads against resistance right towards the highs right here. You can see that's where the highs were, and you can see we're just in that zone. We may need to do a little bit more work if we're going to go higher, but for the moment I think the best thing is just to be very, very cautious. We do have a 55 there, which is different from the S&P 500 and the Dow. This is a trading range, so really be cognizant of that fact. We've covered a lot of stocks today, and I wanted to just share with you that the trade triangles really do keep you on the path to success. And it showed you in, quite honestly, in the Macy is to stay out of that stock. It worked out extremely well. And there's any number of other stocks that's worked out extremely well. Is it right on everything? No, nothing is in this business. But the trade triangles put the odds and the percentages in your favor. Hey, I'm Adam Hewison. Thanks for watching Every Success. Stay strong, stay disciplined in all your endeavors.